Hi everyone, welcome back to Wealthstone, your go-to channel for financial insights and strategies. I'm Greg Shaw, and in this video, we'll cover three important topics. One, the latest market performance, recent rate cuts by the Bank of Canada and the US Federal Reserve, and the ongoing US election and its potential impact on Canada. Let's get started. Starting with the markets. Over the past few months, we've seen a mix of volatility and cautious optimism. Major indices like the S&P TSX Composite here in Canada and the S&P 500 in the US have been fluctuating as investors react to economic data, corporate earnings, and changing interest rate policies. In Canada, the economy is facing challenges in sectors like real estate and energy, with growth slowing in some areas. Although inflation has been moderated from its earlier highs, it remains a concern for both consumers and investors. This uncertainty is reflected in the markets. That being said, sectors like technology and healthcare are showing resilience, and many investors are seeking opportunities in these areas to balance their portfolio. Diversification is key, especially during times like these. Next, let's talk about interest rates. On September the 4th, the Bank of Canada made the decision to cut its key interest rate by 25 basis points, or 0.25%. This was their third rate cut this year, and more rate cuts are expected. This cautious move aimed at supporting economic growth without reigniting inflation. At the same time, the US Federal Reserve went a step further by cutting rates by 50 basis points, or 0.5%, in an effort to stimulate the US economy, which has also been showing signs of slowing. What does this mean for Canadians? The Bank of Canada's rate cut can reduce the cost of borrowing on things like mortgages, lines of credit, and other loan. It's a good time to review your debt or mortgage and see if you can benefit from lower rates. However, keep in mind that lower rates can also mean reduced returns on savings and conservative investments like GICs. Meanwhile, the Fed's larger rate cut is important for Canadians with exposure to US investments or those doing business across the border. The move could boost US stock markets, which might present opportunities, but it's also a reminder to stay informed about global developments as they can impact your portfolio even here at home. Finally, let's talk about the US election. Although it's happening in the US, the effects are already being felt in global markets and its significant implications for Canada, especially when it comes to trade, taxation policies, and economic relations. Historically, US elections create market volatility, and this year is no different. The uncertainty around who will take office and what policies they will pursue, especially regarding trade agreements, has investors on edge. For Canada, this could mean changes in how our industries like energy, manufacturing, and agriculture do business in the US. As we get closer to Election Day, expect some volatility in both US and Canadian markets. However, it's important to keep a long-term perspective on your investments and not get caught up in short-term political events. So to recap, the markets are facing some challenges. The Bank of Canada's 25 basis point cut might ease borrowing costs for Canadians, and the US Fed's larger rate cut could impact both US and Canadian markets. On top of that, the US election is adding a layer of uncertainty. My advice, stay diversified, stay informed, and don't let short-term events distract you from your long-term investment goals. If you have any questions and want to discuss how to position your portfolio during these times, feel free to reach out. And don't forget to like, subscribe, and hit the bell notification to stay updated with more insights from Wealthstone. Thanks for watching. We'll see you in the next video.